Hi guys, how's everybody? Okay, so today to let's wait for a few minutes for everybody to get in to enter. Okay, so today we're going to talk about stocks, and we're going to learn how to read the stocks, where they show, right? And I'm going to talk a little bit about purchasing, buying, and selling stocks. Okay, we are going to do our do now. We're going to talk a little bit about the terms that are more important, and then we're going to do an activity on 4 different stocks that you're going to analyze. Okay. Tomorrow, well, I guess it doesn't matter for you guys, but tomorrow might be a virtual day, so I guess nothing will be different for us if they make an announcement. Otherwise, it'll be Thursday, and we will continue to meet, right? So we're not going to have a snow day. We're going to continue to have our classes online if we cannot come, or if the teachers cannot come to school, okay? So on Friday, we will have our, we're going to have a quiz on Friday. It's going to be about 5 or 6 questions. And it's going to cover stocks and bonds. It's going to cover the 3 chapters that we've been discussing. Okay, so we can start with our do now. There seems to be some trouble people getting into with Zoom. So our do now is what is the risk that cannot be diversified away? Okay, so when we're talking about the stock market and the investing, which is the one risk that cannot be diversified away? One word. So if you have one word, you can answer with one word, okay? What is the risk that cannot be diversified away? Okay, so what is the one risk that cannot be diversified away? type in the comments or say it out loud if you know the answer. What is that risk that underlies every stock, right? That cannot be diversified away, that has nothing to do with who the CEO is, right? Or if the project is well underway, or if we have the right funding. Unsystematic. Yes, close, but I was looking for, I think, yeah, that's what it says on the, if you read the slides, I think that's what it says. So it is the economy, the market, right? The market itself, it's the economy. So the economy is that risk that affects all, that affects the stock market, and you cannot get rid of it, right? You cannot diversify it so much that it goes away, because it affects all the entire market. Okay, good. So so some of the places where you can get financial information, right, are places like newspapers, the Wall Street Journal. You can find information in CNBC or Bloomberg Television Network. On the radio, you can have Bloomberg Radio. On places like CNN Money, right? So those are places that you can find financial information, right? Information about the stock market, about how is the market doing today, right? You can find quotations for your stocks. Okay, so I'm going to show you how to read stock quotations. So we are going to learn how to read those. I know that they kind of look like a mystery sometimes. And then we're going to do an exercise on 4 different stocks. Okay. All right, I'm going to share the screen. I think Lasara's trying to enter, but okay. All right. Okay, so I brought up this information here. So if you type, for example, the if you say Chipotle stock, right? Then you can just type on the Google bar Chipotle stock, and then it'll bring you information about that stock, right? And then when you have a stock that is shown, is presented like this, right? It's going to be for public companies, right? As opposed to private companies. A private company is a company that belongs to either one person or a group of people, but so when there are earnings on the company and the company is private, then the owner takes the earnings, right? Because it's their company. If a private company, it's made up of sometimes thousands of different people, right? Because the ownership is shared across the shares, right? So when you buy a stock, you're buying ownership in a company. So when you buy a stock, you're buying that piece of ownership that you're sharing with other people, right? Which could be thousands. Okay, so Chipotle, for example. So here you can see information about the stock market, and you can see first you will see the name of the company here, right? And then it's traded in the New York Stock Exchange. And these letters are called a ticker symbol, which is, it's a symbol that represents that company. And so you can look up, if you look it up by that ticker symbol, then you know you're looking up that company. You know, it's like usually it's a few letters in capital letters. It's like another name for the company that the stock market uses. And then this is, who knows what this is? This number here, this big number.
The value per stock?
It's yes, the value for stock for that day, for today, right? So if you, that big number there that you're gonna see is today's value. It's the value right now, December 15 at 2:34 p.m. Yeah. You are going to see the value of the stock for today. You have a few choices here, but usually the default is 1 day. So as you can see, it's gone up and down just today, right? So the price fluctuates, it changes. You can see, and then you can you can expand to a longer term, 6 months. You can 5 days here, 1 month, 6 months, year to date, right? 1 year. So you can see that this stock from a year ago, it's been doing what? Does it look?
It's been increasing.
Yeah, it's doing well, right? It's going, the price of it, the price has gone up a lot, right? since this is like January here, January, February. How about 5 years? Let's see, 5 years. Oh, it's definitely gone up in 5 years, right? And it looks like this trend is kind of, it's been going on for a while, right? So definitely upward. So you can see, and then max since before, since 2006. So look at how low it started, $46. And it's been going, sometimes goes up and down, but overall it goes up. Here had a big decline here. Notice this decline here. And we will talk about that later for Chipotle, right? On your classwork. Okay, so moving on. This is going to be the change since yesterday. So since yesterday, it's gone up in dollars and in percentage. $41 since yesterday, and which is equals 3%. So the change up, because it's a plus, otherwise it'll say minus, and then instead of the up arrow is going to be a down arrow. But it's since yesterday. So the price and how did it change since yesterday? Okay, so then the trend over different time periods, and very convenient, right? In a chart, it's very easy to see that. So this is the price that it opened today and the high today. So if you change this to 1, it should match up, right? So 1,321 at the beginning at 9 a.m. when it opened, 9 or 8 a.m. Not sure what time it is. Oh, 9:30. It says right there. Okay, so 9:30 a.m. open high. This means the highest that it has changed in price for today. I mean, the day's not over because the market closes at 4, I think, at 4 p.m. But so far, right here at 240. So you can see it's fluctuated like 20, 30, Yeah, $34, right? Just about, and some cents. That's what it opened. This is the lowest for today, 1,318. So if you look at the chart for today, the lowest, which looks like it's here, 1,318, right? You see that? So what time did it open? Or what was the price when it opened? What has been the highest price for today and the lowest price for today? And the day is not over. So this will continue to change, the high and the low, right? If it goes higher or lower, right, than those amounts. The market cap is $37 billion. So the market cap is the price of the share times how many shares are outstanding, how many shares the company has issued, right? So if you multiply this price, 1,350 times all the shares that the company has outstanding, then that's market cap. The price earnings ratio, that is the price of the share, of each share, over the earning per share. So what are the earnings? So it's the price of the stock over the earnings per share, okay? Dividend yield. Who wants to take a guess? What is dividend yield? We spoke about returns, but this one is, they're calling it dividend yield.
Attention, Ms. Jankowski, please come to the main office. Ms. Jankowski, please come to the main office.
So the answer to the do now is the economy. So it's just one word. Is the risk that cannot be diversified away.
Can you repeat, like a little bit, because it was glitching.
There's some risks that are that you can diversify away. Like if you have a CEO that is particular to a project, right, or that investment that they're trying to do doesn't pan out, right, then those are risks that you can diversify away. But the one risk that you cannot diversify away is the economy. So I mean, that was it for that, for the do now. It wasn't very long. So what is the dividend yield? Who wants to take a guess what the dividend yield is? Guys, turn on your cameras. I cannot see you. The dividend yield is, the yield is a return, right? So the return is, it's a percentage that only includes the dividends alone. So when we spoke about returns, we added the dividends for stocks, we added the dividends and the price, the increase in price if you're selling, right? So the dividend yield is the same thing, but it only includes the dividends. So what percent of the stock price are you getting? Now in this case, there's a dash here, which means, what do you think that means? No dividends. They're not paying dividends. I mean, they have earnings, hopefully, right? Because the price earnings ratio is 161, but they're not paying dividends. So the earnings that the company is earning, they're not paying it out to the shareholders. So if you have stocks, you're not getting paid dividends. Hopefully, what are they doing with that money? We don't know. Hopefully they're reinvesting it, right? In a good way, right? So if it's blank, that means that there's nothing, right? They're not paying the dividends. Although that does not mean that there are no earnings. That just means that they're not paying them to the shareholders. Previous close. It's the price. The closing price from yesterday. So previous close, opening, I'm not sure why they're different, but you know, they should be pretty similar, right? When did it close? When did it open? Okay, the 52-week high. Who wants to guess what that is? Or who knows what that is? Who would like to share what 52-week high is?
Does that have to do with what the highest amount per year was?
Yeah, so in the last 52 weeks, right, which is a year, in the last 52 weeks, what was the highest price that the stock reached? And 52-week low in the last 52 weeks, when was that? Was the amount, right? So that's a pretty big range, right? At one point it was 415 sometime during the last 52 weeks, and 1,384. So if you go here 1 year, that's exactly what it should be. So the lowest point is about here. It says 465 versus 415. So it looks like the amounts are not exact, but I mean, it's close, it's pretty close. And then the highest in the last year should be around here, right? $1,372, 1,384. Again, it's not exact, but it's so you get an idea of how it fluctuates, right? If there is a wide range here, normally that means that there's more uncertainty. So okay, any questions about how to read a stock? So you know how to read it, but how to get the quotes, what the ticker symbol means, and you know a little bit about how the price changes, right? You know how to find out if the company is paying dividends. If it's paying dividends, you will see what percentage of the stock price is dividends, right? Over the last, and it's going to be over the last year. So if there wasn't a percent there, if it said like 2%, you know it's 2% over the last year. So if you were to buy the stock today and the dividend didn't change, that would be your return, okay? In dividends, not in capital gains.
If it says a percentage, does that mean it went up or something, the return?
Yeah, if it's, if your stock was, let's say, let's say you buy a share for $50, right? And then it paid $1 in dividends over the last year, then it would be 1/50, which is 2%. So it would say 2% in there. So it's how much it paid in dividends over the last year as a percentage of the stock price. So it would be your return, your dividend return, dividend yield. That's why it's called dividend yield. Okay, so selecting a broker. So you can have a discount brokerage firm, or you can have a full service broker. And the difference is that a discount broker, it's going to be, you can go to them and they will facilitate purchasing the shares, right? However, they are not going to give you advice. So a full service firm, it's going to advise you, buy this, buy that, right? It comes at a cost. It's also more expensive than a discount firm, right? But it's a service, right, that they provide. So, a full service firm could be somewhere like Vanguard or Fidelity, or some banks offer full service brokerage firm, right? A discount firm, you will be able to purchase for a lot less, usually online. So you'll be able to purchase stocks for a lot less, and they will provide you with a lot of reading material. So a lot of news that are targeted to that company. So you will have a lot of information, it's not going to be a person, right? Somewhere like eTrade.com. So they don't offer advice, they only execute the transactions. When you're buying and selling, you can have a market order or a limit order. And that means that you are going to, when you place a market order, you're telling the brokerage firm to purchase a set amount of let's say stocks, right? So you have market and limit order. When you place a market order, you tell the firm, okay, so purchase $100 of Nike stock today, right? Or tomorrow, whenever it is, right? And they will go out and get the best price for that day. You come back and you check your account and you will have purchased, right? So that's a market order. They will go and you require them to purchase at the lowest price available that day. So if you put in market order, you transfer the money and then they use it and it happens, right? And we all know that the market, right, it fluctuates, goes up and down. So you're not sure exactly how much it's going to cost, right? Okay, so if you have a limit order, and my computer is dying, so I need to get my charger. Excuse me. A limit order, you're going to tell the company, your limit. Do not buy if it's higher than a certain amount. So you're going to place a restriction on the stock, right? So if you're buying, if you want 100 shares of Nike, but you do not want to pay more than, I'm just making up a number, more than $50 per share, right? And the stock goes up to 55, then it's not going to get purchased because you did a limit order. So you specify parameters, right? Don't go over if it's this much, or don't buy it if it's under a certain amount. The difference is that with a limit order, you kind of know what you're buying, right? But you are not going to, you might be left out of the transaction. So they may not execute the transaction because it didn't meet your parameters, right? So you might come back and realize nothing got purchased because it's a limit order. With a market order, they will purchase something, right? And you might be surprised because it might be more than what you think it was. So that's the difference. Okay, so can somebody explain what is the difference between market order and limit order? If you're buying a set of stocks, let's say you're buying 100 shares. If you place a market order, how are they different? Are they the same?
No.
No.
But I think if you place a market order, you place an order, but you're not exactly sure how much you're gonna need. You're just placing an order. But then for the limit order, you get this certain amount to a limit, and then you don't really know if it's gonna be enough for that day, right?
Right, you're gonna set limits. You're gonna say, don't buy over a certain amount. Don't buy under a certain amount. So a limit order is not guaranteed. Only if it's within the parameters you have to specify, right? A market order, you're saying, buy me some stock, and they will go out and buy you stock. They are required to purchase at the lowest price available. So they do have to do that. But you don't know what it's going to be. I mean, you have an idea, right? Because you're buying, you're checking what the price is, but you don't know. So you're required, the company is required to purchase at the lowest price with a market order, but they will purchase, or you will purchase. And with a limit order, you set parameters, low or high. Don't execute if it's not between what you want and that price, right? And that's because it fluctuates during the day. There's volatility, yeah. So, okay, so that is those are the, what I was going to discuss today. Now I have an activity. We're going to look at 4 different stocks and you're going to analyze them, okay? It's gonna be Nike, Chipotle, Amazon, and Snap Inc. So go to Google Classroom. And it's called How to Read Stock Quotations. No, I lied. It's called Stock Performance. Chipotle, Nike, Amazon, Snap. So I have 4 links for the 4 stocks. Wait, I'm going to share the screen. So I have the 4 links, right? This is going to take you to this here. You can use other places, but I chose Google. Okay. And the questions are, each company has an abbreviated name called a ticker symbol. What is the ticker symbol for each? Right. So the ticker symbol here, right? Their stock market name, so to speak. Which of these stocks has seen a significant rise in the price last year? Which one has stayed about the same and which one has decreased? So look at the 1 year. You can look at the here, 52-year. And you can see which ones have had a significant increase or decrease or stayed the same. Look at the 5-year performance for Chipotle. Why do you think there was such a huge decrease in price in January 2016? So remember we saw there was a dip in Chipotle around that time. That's what I say, we're gonna do this later. So find out why that was the case. And the last question is, why do you think there's a general uptrend in the stock price of Amazon over the last 5 years? Okay, so please take a few minutes to answer that and then we can discuss, okay? Any questions? I am going to take attendance. Everybody's here today. Angelis, you're marked absent for the day. All right, guys, where is everybody at? One, two, three, four. Where's everybody at? Show me with the fingers. Uno. Two people at one people at four. Okay. Okay, so maybe we can discuss number one. We have time for number one. So what is the ticker symbol for Chipotle?
CMG.
CMG, right? Everybody saw that, right? Where it is? How about Nike? What's Nike? NKE, good. Amazon, what's Amazon? AMZN.
AMZN.
Good. And Snap Inc., which is part of Snapchat, or the parent company of Snapchat. Snap. Okay. All right, good. So now you know how to find the ticker symbol. Which company had a large range in the price of the four? Which? There was one that had a tremendous range, right, over the last year. Humongous. Which one of the four had a large range?
I think it was Amazon.
Amazon, yeah. If you look at the 52, from 1,626, right, to 3,552, that's very large. You can also see it here, right? How it went up. Nike and Snap didn't have as big of a range, right? I mean, their stock is not worth. Chipotle also had a big range, right? Okay, so it is 3:15, so we can continue, we will continue the other questions tomorrow, okay? You guys did the homework, right? The Ed puzzle? If you listen to the Ed puzzle video and answer the questions, okay? All right, bye. Bye, guys. Bye. I'm gonna close the session. Bye.